have Jonathan Schiessl also joining us on the show right now, along with Kunal as well as Naresh. Very good afternoon to all three of you. And Jonathan, let me come to you. And now that you're seeing a good recovery in the markets, key question is, will this be sustainable given the fact that we are actually staring at the big date now, April 2nd?
Yeah, absolutely. I think it is very, India's outperforming the likes of China in the very short term. Obviously, we had seen some excitement in other emerging markets, particularly Chinese ones. So, but I think, overall, there is this move potentially in the short term out of the US, and emerging markets in India looked quite attractive, and obviously India had come off some way. So I think, yes, it looks attractive. Not sure we're going to push back up to all-time highs anytime soon, but certainly for the time being, I think the market probably has still further upside.
Still further upside. Kunal, are the charts also indicating the same?
Yeah, very much. So, right now we are at a point where after this 1600 point rally, we are expecting that maybe markets could get into some kind of volatility. But I think this is classic, trend breakout for the index. So the best part about the charts for the Nifty so far is that today, after this gap up, we've seen the third gap, for the index. So, third gap generally is a breakout gap for asset classes or for stocks or for indices in this case. And typically that becomes a solid base or a support for the index. So which means now, in the morning we were discussing 23,000 as a base or a support for the index. Now we are looking at almost a 400 point jump to that base. So 23,400 becomes now a fresh support for the Nifty, and keeping that as a stop loss or a support point, I think we could now be looking out for even 24,000 mark for the index over the next few trading sessions probably.
Wow, 24,000. And when was the last time we actually heard that sort of a number coming in for the index? Naresh, what's your take? Banks are the one that will lead this rally going ahead again?
So clearly banks have been the leader. First, they did not correct as much as the Nifty, and now in the recovery, there is leadership. And there have been some very sharp moves. So if you look at, say, ICICI Bank out of nowhere has come all the way to all-time highs. You have Kotak Mahindra Bank hitting multi-year highs. You have HDFC Bank again coming back closer to that 1800 odd levels, very close to those levels. And even the other names have started making a bounce back. And the whole financial services pack also. So Bajaj Finance at an all-time high. You have a lot of small NBFCs which are up 20% in the last 2 weeks. So the structure is positive for leadership coming in from the banking and financial space. On the Nifty, 23,800 to 24,200 is a stiff area of resistance. You have the 200-day moving average, the previous highs. Similar levels for Bank Nifty is closer to 52,000. So at some point of time, there could be a downtick from those zones coming in. So closer to those levels, you want to be booking profits over there.
Okay, that's the take on the index alone, but so many buzzing spaces. And let's pick up some of these stocks one by one and tell you what exactly are you seeing. Of course, there's IGL as well as GAIL, which are sensitive today. The PNGRB, remember, has initiated a public consultation process to amend the pipeline tariff regulations. And both these stocks are actually holding up as we speak right now. Naresh, I don't know how closely you've been tracking the prospects of an IGL and GAIL, but anything on the charts?
So they've gone through, say, IGL itself has been a tough stock given the volatility it has seen, but ended up at the lower end of the range only. So look at the last 5 years, the stock has made 150, 180 back in COVID lows, as well as in 2022, as well as in 2024-25. So that's been a tough call. Over the highs, it has been 280. So right now we are in the middle of the range, but if it starts sustaining about 220, that would imply the trend has finally changed. So a lot of these names have corrected a lot, and trying to make bases where it could be a good entry point for the long term if the trend changes from here, upside could surprise.
Very interesting article actually coming on Wall Street Journal saying that the US is planning to exclude the sector-specific tariffs on April 2nd. A lot of flip-flop when you talk about that particular front. What the sources have told the paper is the fact that the sector-specific tariffs are now not likely to be announced on April 2nd. Remember, in February itself, Trump had indicated that he will look to impose auto tariffs in the neighborhoods of about 25% and similar duties on semiconductor as well as pharmaceuticals. We're talking about auto in particular. What's your take on auto pack, Jonathan? And also given the fact that back home, we've not seen that great of sales data, at least for for 4 to 5 months on a trot. So what's your take coming in on the auto pack? And if you like that entire space, which is the bigger bet, four-wheelers or two-wheelers?
Yeah, we're sort of avoiding the space and have been for quite some time, if honest. It's been a difficult space. There's obviously a lot of competition in the space, and obviously there's technological, or it's shifting with the whole EV cycle, and obviously what's going on with China exports. So we've sort of kept away from it, if honest, and if we did have preference, it would certainly be in the two-wheeler space, but even in that space, I think competition is very intense. So it's not an area we've looked a great deal at, if honest, at the moment.
That on autos. In the meantime, let's just take stock of what Nifty Pharma has done in the last 1 week or so, given its sensitivity as well to what's going to come about with the tariffs. Nifty Pharma in the last 7 days has been quite okay. You've had a lot of US FDA clearances as well come by with nil observations, which was why some of these mid-cap pharma stocks were sensitive. But Jonathan, would you say till April 2nd, maybe avoid any trades within pharma, or for that matter, the rest of the tariff-sensitive sectors?
It's very difficult, isn't it? Because every day we wake up, we get a different piece of news. 1 minute they're on, next minute they're off. Different type of tariffs. It doesn't. Markets generally dislike uncertainty, and clearly we're having a lot of uncertainty at the moment. So yes, expect the sector to remain, all these tariff-sensitive sectors to remain sensitive. And if some of them do look a bit oversold, then I think longer term investors should definitely have a look. So yeah, it's the underlying fundamentals of the pharma sector, for example, remain pretty good in our view. But obviously there's a lot of noise going on at the moment, which makes it difficult.
A lot of noise around the tariff front, actually making it difficult to look at pharma space, but no doubt the fundamentals are still pretty strong. We are only building on to gains when you talk about the markets, especially the broader markets, also supportive in trade today. But yes, you can't take your eyes off Nifty Bank as well, because that one is also outperforming the benchmark indices right now. But talking about banks, my colleague Anurag Shah caught up with the ICAI president who spoke about IndusInd Bank and the roadmap going ahead. Listen into what he had to say.
We take a call whether it has to be taken care by FRB. So nothing has been done as of now. FRB, when it holds its meeting, they will consider and see if anything has to be taken care of. We are not at the moment aware of any shortcomings. The media reports are separate things, but we have not got any documents that could ultimately come and prove that shortcoming was there. But in a larger parlance, we need to understand the derivative reporting, how the exposures are created, how market margins are settled. These are issues which needs to be pondered upon by chartered accountants, particularly by auditors of large banks. So we have been emphasizing this fact, and we have made aware our members that they have to work in tandem, again, with the best practices internationally on derivatives.
Okay. Sir, but there were reports quoting you only that your FIRB committee will take up the IndusInd Bank issue. So do you think it will be taken up going ahead?
See, boss, it is an arithmetical thing. I can't say we can take it. If there is some shortcoming, we have all the rights to take it, to educate our auditors, or see if it is failing somewhere, to refer it to the disciplinary committee. That is our right and prerogative. But we have to examine the documents, see what is there, and then take a call. No examination has not been done. The press has been asking us whether we can take. Yes, we can take it if we intend to. But there is a logic behind it. We have to look into the basic structure of accounting, what has happened, what has transpired, and if we feel that something is lacking, then we could refer it to, or the FRRB could take it for their examination.
Okay, that's that right now from the ICAI president. In the meantime, just looking at the market, and the IT recovery seems quite surprising. Jonathan, your take on IT, given its susceptibility to not just the entire AI transition, but also tariffs, perhaps?
Yeah, absolutely, and clearly, it's been a tough space. Yes, it's rebounding in the very short term, but no, we still like it longer term, and obviously, it's unfortunately another sector that has got wrapped up in the whole tariff and everything going on in the US, particularly with obviously the cuts to US government spending, which certainly Accenture was talking about, a little while back. So that's hurt the sector, but obviously it has come off a long way. Valuations look pretty good to us. We have exposure to the sector. We're comfortable with this sort of medium to longer term views of what that sector offers. So yeah, we're happy with the sector, but it's obviously been a painful ride the last few months.
That's a take coming in the tech pack. Kunal, coming to you, how is the tech pack looking to you actually, particularly given the fact that there are a lot of news flow surrounding this one? But on the charts, do you think that this one will also lead the market rally along with banks?
See, we are at a very critical point for the Nifty IT index. I call it critical because on the charts specifically, in the last 1 month when the IT index was falling down, there were 3 gaps which were created for the IT index. The first resistance now is at 37,500, 600 zone for the IT index. We are almost at 37,300 for the Nifty IT in the IT index, which means we are very close towards breaking out of that first gap resistance for the index. This could be very interesting because if we've seen this historically also, that when stocks try and fill in the first gap which is on the downside or on the upside, they tend to reverse the course of the immediate trend, and that could, I think, lead to more of short covering for the indices. And I've also looked at the charts for the Nifty IT stocks, the large cap names, TCS, etc. And many of these stocks are showing signs of volume pickup. Now this could be expiry based phenomena also, or this could have more of a positive effect going forward. But I would wait out for that breakout of 37,600 mark on the Nifty IT index. If we manage to do it in the next couple of days, then we could be looking at a strong short covering move across the IT stocks also.
More than the beaten down names, your Infi, TCS and the likes, you think something which had relative strength within IT, like a KPI IT Tech, which is also today the top mover within the IT pack, you think one should bet on that?
So there should be a bounce back in a lot of these names. We've seen KPIT correct from 1900 all the way to down to 1200 levels. We did not see follow-up selling in the fresh 52-week lows recently. So that indicates it could go back to 1450. But structurally, what we see is it's a bounce back trade. One has to be careful. And overall, the leadership is going off from IT, and we would go sideways after this recovery, even in the large and the mid cap space. So it's a trade wherein you expect a 5 to 8% bounce back, keep a 2% stop loss.
Jonathan, wanted your take coming in, especially on the metals pack, given the fact that this one has also seen a good up move and people are touting this one also to be one of the leaders, given the fact what is happening in the Chinese economy and how actually you have the entire scenario, confluence of factors actually aiding the rally in the metal space. Are you of the view that it is time to look at this one, or you should skip it, given the fact the nature of the entire space is it's heavily dependent on what happens globally when you talk about commodity prices?
It is in the crosshairs really of various issues going on globally, be it tariffs, be it geopolitical struggles going on as well. So I think there is a lot of, again, a bit like we were talking earlier, there's a lot of noise around this particular space, and this is obviously a very sensitive space for many countries and regions as well. So I think that aside, if you look at various stocks that are more domestically focused, then we remain quite comfortable with those sort of spaces. Although from our perspective, we don't tend to look at deeply cyclical sectors like the metals. That said, though, I think they can look quite attractive from time to time. But I would say again, at the moment, it's probably a sector with a lot of noise going on, and particularly if it's a company which does a reasonable amount of exports, that's going to be a headwind for some time longer until we have a little bit of certainty about what might come next. Although obviously, certainty is something we've been a bit short of lately.
Okay, let's bring up BHEL as well. Antique has put a buy on this one with the target price of 300, saying that the stock has meaningfully re-rated over the last 1 year. Yet we believe that the stock is inexpensive and has the potential to re-rate further. They've of course talked about the order inflows as well and the outlook looking promising right now, and that around 4 gigawatt of ordering is expected to materialize, and that the business performance is expected to further improve in FY26. 6 according to them. BHL, of course, a steady ship today, almost higher by 3%, but that's the case with L&T and the rest of the cap goods majors as well. Jonathan, do you think after that little bit of aberration which played out past month in terms of government spend and capex because of the state elections will now get back on track and cap goods is a space to look at?
Yeah, I think it has underperformed more recently, but yeah, as you rightly say, I think some interest probably will come back in the sector. Probably I would wait a little bit longer if I'm honest. I think there's other more interesting sectors at the moment than cap goods, but I think for someone who's a medium to longer term investor, it's obviously a great story with India. There's still a lot more expenditure, both at a federal and the state level, that needs to be happening within India, and obviously we're all still keeping an eye on private capex as well. So yes, I think they are key critical sectors to be keeping an eye on, but I think there is still a little bit of uncertainty from a capital goods perspective just in the short term.
Other than financials, what are the sectors that you're liking right now?
Yeah, I think, as we said a moment ago, I think IT has come back some way. Yes, short term, probably there is still uncertainty, but we'd rather be looking at sectors which have come off where we think medium to longer term there's still a good story around. So we like IT, selective healthcare as well, and a sector an area which is sort of a bit unfocused on remains the whole FMCG space as well. So yeah, those are longer term stories. That's the sort of stuff that we tend to play in those areas.
Point taken. Thank you so much, Jonathan, for joining us on the show, talking about the sectors that you're liking, IT, select pharma, FMCG, as well as banks. Thank you for sharing your views with our viewers. We're coming to you, Kunal. Let me get your closing picks for our viewers.
So that's one Chambal Fertilizers, a stock which I think is confirmed a fresh multi-week high above the 600 mark. And the stock's especially coming out of a major consolidation of almost like a 40 to 50 pointer consolidation. So expecting another 7 to 8% up move from current levels.
All right, that's Chambal Fertilizers coming in for Kunal. What about you, Naresh?
So that would be a buy on Container Corporation, which has seen a large correction. Stock is at the same price as where it was 5 years back as well. Expecting a bounce back towards 730 to 750 levels, stop loss at 708.
Okay, let's take a very quick break on that note. As we do that, with the US equity markets dropping in fact drastically to sub 50% levels in just 1 month, and Trump's tariff rhetoric as well constantly rattling sentiment, investors have now clearly switched over to EMs as a more favored bet. Let's hear out what some of the global opinion is coming in.
Yes, India still trades at a premium to emerging markets, but is a much smaller premium than it was before the correction about 3-4 months ago. Therefore, again, as I mentioned, we start to look into some of the companies that we like to find opportunities. Now, in terms of structural stories, what you want to look into are overarching trends that have many years to play out. In India, for example, one of the trends that we really like is inclusion of women on the labor market, and overall kind of like, the ability of India to absorb more manufacturing. I think those are two interesting structural trends.
I think over the remainder of this decade, it is quite likely that US equity markets are going to underperform much of the rest of the world, or a more positive way to put it is I think the rest of the world, which was very cheap, particularly Europe and to some degree China, is probably going to outperform the US. And of course, that has already been the case in the short 3 months of nearly, or 2.5 months of 2025 so far. And I wouldn't be surprised if that continues erratically for much of this year.
What we've got is a tech story in China plus a bit of domestic demand. And I think that's waking up global investors. I'm noticing a few global funds that I follow beginning to add back some China stocks. So I think it comes back to this sort of selective story in EM. Maybe there's a story in Mexico, maybe at the moment there's a story in China. Elsewhere in emerging Asia, if we look at the big markets, Korea and Taiwan are really too correlated to NASDAQ to do well. And in the ASEAN region, there really is a lack of catalysts. If anything, there's some sort of negative policy in Indonesia. I think the story for India is a little bit more complicated. Obviously, the market has sold off. It's sold off because people were disappointed with the level of revenue and EPS growth that was being delivered in an expensive market. There's perhaps less confidence on the growth story in India